Thankful for Slush, Alto ES, all for being able to be here. And today we got some very important stuff to come up with. I got 2 slides for you before we go into with our panelists. And let's just position what business angel investing in our consideration is all about. So, the classic picture. Let's see, we got in the beginning. For all of you who are entrepreneurs, please raise your hands. Yes, majority, perfect. So, the early stage, friends, family, you get in the mood, you want to grow. And it's all about the curve going down. It's quite difficult to get it upwards, but well, then comes the other part, the VCs and the institutional investors. They're all about 1 million euros. And that in the between, that's the value of death. How many of you have the courage to raise your hand and say that your entrepreneur, your company is in the value of death level? 1, 2, 3, 4. Perfect. This panel is for you guys, so let's rock on. Good. So let's get you. What is a business angel? It's all about knowledge, networks, and of course a little bit of the capital as well, but in this order. So hopefully we'll be able to implement these guys' knowledge and experience to help you guys to make this as well reasonably good as we can. We got 4 topics: how to approach an angel, what to consider, what are expectations, 3rd, what are the normal failures, and 4th, what happens after the investments. And please, this is the Finnish traditional model. There's like 5 meters to the audience, but be active and just, if you want, you can just tweet FiBAN.org, and I'll try to read them as much as I can and implement those in the panel. But good, let's get started. And Keith, if you could start your presentation round.
My name is Keith Bonnici, and I'm representing Finnvera Venture Capital Unit, and Finnvera is investing.
Speak up.
Higher, yeah. So Finnvera Venture Capital Unit, we have about 120 million under management, and we are early stage investor, and we are investing government money. So our funding is coming via the state budget. Annually, we are doing about 20 new investments and about 40 follow-up investments.
So Keith is our obligatory institutional representative today.
Okay, I'm Tapio Heikkilä, and I'm a private investor, full-time, doing that job since 2006 or so. My background is 20 years at Nokia Networks, running different businesses.
My name is Jari Korhonen. I'm an angel investor. I've invested to 16 companies so far directly, and to 2 angel funds and 1 sweat equity investment.
Jari Pasanen, currently with the Finnish Innovation Fund. Prior to that, I worked also for this big bad corporation, i.e. Nokia, for 16 years in different executive positions. I'm also acting as a business angel with a couple of companies.
My name is Inka, Mero. I'm from KoppiCatch, which is one of the leading startup accelerators, seed investors and incubators here in Helsinki. We look to investing into very early stage or seed stage companies across media, internet, and analytics, and partially also e-commerce. We have 7 investments in our portfolio. Our investments vary between 5K to around 50K per company, but we do work very much with the companies, and today have 7 companies in the portfolio and done 1 really nice exit, Zokem, which was sold last summer.
Perfect. I'll take the mic with a little less voice. So let's get it on. The first theme was how to approach. We've seen a lot of you guys doing the approachments. And let's start with Ari. How would you say in concrete, what's the best way to get in touch with a business angel?
Okay, so maybe the best way is if you approach through some, let's say, familiar party for me, let's say that, because I get some hundreds of emails every year and from you, so it's if you somehow differentiate from the big crowd, then you get the more notice. So if you approach through somebody I already know, that's always a benefit.
What about Tapio?
Yeah, that's our challenge is that we really get a lot of proposals, and we also have a lot of other things to do. So time is the critical resource. So make it clear, make it very easy to understand what you propose. But if you fill my inbox with 20 megabyte presentations and 60-page business plans as a first introduction, that's just too much. We cannot digest that. So make it clear, make it easy to understand what the idea is. If I get excited, then we have more time to figure out the details.
And Jari, you run a relatively big company.
Well, I don't run it, but I'm responsible for the business development in the Finnish Innovation Fund. But just to answer the question how to approach business angels, I think I'm very much supporting what Ari was saying. Because I personally, the cases I've been involved with, they are actually coming from the business angel network. There are people who have done already some prior work. They have done excellent work, in my opinion, because I happen to know these guys. That's why, for instance, the additional work that I need to do is much less, and that's easy to jump in. But I think, once again, one additional element which I consider extremely important is events like this. Because we're the better place to meet business angels or actually give your value proposition, what you have to offer, than events like this. So these are excellent places to meet angels.
So I think from startup point of view, the really question is that what is your team and do you know anyone who knows anyone? And that's the tricky part, because we're all saying that, yes, if it comes from a great contact we have and we trust, we're going to sort of meet you and see the presentation or see the team. So it all boils down to your own personal networks or the mentors you can build over time. And really to find those people, I would say go for the people who have passion for your industry. So if it's a travel app or something for customer analytics, it might be someone, you know, from the banking industry, through your friends, family, and fools network. And then you find a mentor who gives you the introduction to the angels. And when you meet the angel, your pitch needs to be in place. So you tell shortly about the team, not too much, but you try to very concretely explain what is your core idea. And you know, we hear a lot of pitches, so being short and precise is of course important. And if we're really excited about the personality and the team, then the discussion will follow on.
Yeah, definitely. That goes fluently into what the expectations are. Let's go a little further in that part, if that's okay. Inka mentioned already some of the expectations. Ari, you mentioned quite several. What should be in order when you do your pitch? As Ville Miettinen said during the panel on the other side, he said that he doesn't want to hear a pitch. He wants to hear a discussion, introduction. So, what about you, Ari? What are the expectations?
Okay. The order is not maybe the most important, but at least you should present the team, the capabilities of the team, what the team can do. Are you alone? Are you in a group? What are your strengths and how you complement, let's say, each other? That it's like complementing this kind of competencies in a team. So team must execute the business, not only the planning the business, but also to execute. And also it's really important that investor gets the feeling that, okay, these guys can do it. They can really create a growth company. Maybe it's not with this business plan or idea what they're showing, but anyhow they will do it. Second, I think for me is this kind of that the business model is scalable, that it scales up. And the third one is that the market don't need to be very big, but if it's not very big, then it must be growing very fast. So even the small market is okay, because then if there's a big growth. So the market size and the market growth, those three things.
If the company only wants to grow in Finland, is that attractive?
That's a good question. I think we are in such a small country that we need to look out from the first day.
Any other comments?
Yeah, definitely. I rate the team. Team is the number one, and I haven't seen any business plan yet that the team can follow more than 8 months, that you have to change that. And the problem is that there really is quite few teams ready or even capable of changing the strategy, what they have decided. And that's why the team is most important.
And I think what is very, very important is that you think as an entrepreneur and a company, you think what you need. Of course you need money, but what else? Because there are lots of different kinds of angels. Of course we are private people who invest the money that we have earned and paid taxes off, so we have different agendas. There are angels who just look for passive investments, financial investments, but there are also angels who look for very active possibility to participate in the daily life of the company and contribute in many ways. Also, there are angels who take this as a kind of lifestyle or hobby thing, which we do or they do when they think it's convenient and fun. But then there are angels who take this very professionally and very seriously. And every combination, I think, exists out there. So you have to figure out beforehand what you want, and then you need to discuss that with the angel candidates if you find a match. And this match is in my thinking the most important thing. If it is not there, maybe the investment is a happy moment, but I can guarantee that it goes past very fast, and then the reality strikes back, and if you are not able to cope with that reality, you are in trouble. So figure out beforehand really if the match exists.
Actually, I couldn't agree more with what Tapio was saying about this match. Because if someone comes to me asks for investment in say construction area, the answer is obviously no, because I don't know anything about construction. But if someone is more keen on for instance working or looking for someone to help him in say mobile telecommunication or internet related business, well, that's where I can add value, because the point is that something I don't see happening enough is that the ones who are already, for instance, received an investment from business angel, how they can exploit even those angels to the extent that I think should be done. Because there's a lot of knowledge, like Mikko was saying in the beginning, out there, and you should just take advantage of that as much as possible. So that's why for instance, when I'm looking into it, it needs to be clearly a match. But there was a couple of issues which was already discussed. I'm actually using myself kind of mechanical structure. I'm using it as a six-pack model. If you saw what Steve Blank was talking about, he was talking about this kind of 9-area business canvas, dynamic business canvas. I'm using simple model, which is six-pack. And in all these areas, you have to have a clear kind of answer. What are you going to do with it? So what is your value prop to whom? How you actually make money? Which are your kind of partners? How are you going to collaborate? Which are the markets where you enter? And then finally, how are you going to do it operationally? If we have some clear answer to all these areas, I think you're well off.
Well, as said, there are a lot of different types of angels and investors, and I guess one of the aspects that we have is that we have quite strong views of the business, and we typically develop the business model and the core idea a lot. And then coming back to the expectations, we expect obviously the team to have earlier experience, potentially relating to the business itself, or at least something in terms of a technological capabilities or partnership contacts, or something which really can help the team to progress faster than the competition, because competition is going to be there always. So it's either a killer team or a killer idea, and to be honest, the latter is more difficult, because if you need to start building the team to a great idea and one person, it's always quite challenging, even for a quite networked investor or an angel. Other expectations coming along the way to the point of, we date with the startups quite a lot, because if you invest in money, you're going to get married, and getting rid of the marriage is pretty tricky. You can become a passive investor, but typically that's not what we want. So really testing the relationship, i.e. developing the business model, which Keith mentioned, is very, very critical.
Just quick comment, this is very unofficial, but the good due diligence and elements is that you make you have a heck of a party with the entrepreneur, and then you get very philosophical. So I guess that's the best part, to get to know the team the best way. What about Finnvera? Do you have good parties to you really know the target?
We have good parties. Actually, one good way to know the startups is that we have this kind of events what we have now here, and we try to make the barrier as low as possible that the entrepreneurs are contacting us, and like we are talking about that the volume is the problem and the time is so limited. So one good example to have a one pager or two pager and 7 good slides and then a phone call and have a meeting. That's the good way to start the collaboration with us. Yeah.
One thing is syndication. So if I expect from entrepreneur that he's ready for that. Investors are syndicating, because quite many times I have been approached and asked that, okay, we need to have 200,000 euro and maximum 2 investors, or 600,000 and maximum 3 investors. So it's out of range, let's say, what's the normal angel investment side in the first round. So it's good to be prepared that angels, they really would like to syndicate. And it's also good for entrepreneur, because then you have more brains, more people who can help you in the different stages of the company.
Quick question, Ari. How many cases have you invested alone, and how many have you syndicated?
Maybe only one alone. Yeah.
Okay. What about others? Inka, have you invested alone?
Well, I don't invest alone because I sort of work together with my partners from KoppiCatch. But there is like 50% we've started the investment alone, and then we're very quickly syndicated other players. That's sort of a very pre-acceleration or incubation phase of companies. But typically, we co-invest with other players.
Syndication is a must.
Well, I have made only 5 investments, which is not so many, but I made very active investments, which means that I participate in the companies on daily basis almost. And one of those 5 I made alone, and 4 are syndicated. But that what I made alone is kind of a little bit different. It's lower risk service concept, so it's a different animal anyway.
Yeah, I can also add that syndication is must, because we have the limitation that in the early stage or pre-stage stage, we need to have at least 20% private money in our investments case. And when it's a startup case, haven't have revenues, it's a 50-50. And last year numbers, there was about 144 angels investing in our portfolio companies, and the volume was last year 8.1 million euros. So the angels are really active. To compare it to 1 year before, it was 4.5 million. So the numbers really are going up and up. And in the midsummer, it was something like 5 million euros. So we have the possibility this year to go over 10 million euros. So for our business, it's really crucial that we have active angels there.
One more thing about this syndication, that you should be prepared also to take investors out from Finland or out from your home country to your investors, because if you're going, for example, to States, maybe it would be good to have one angel from the States as an investor.
What about, how does it work? How should the entrepreneur get syndicated investments? Do you get it to pick it up with your friends, or should the entrepreneur be active and try to get as many angels and match them? In which way?
Well, today there is no specific process available for that, but you have to try it in different ways. Vera Venture for Finnvera has a very good system. FiBAN is in the process of putting together a system, and in FiBAN we have a possibility to syndicate within the members, so that this kind of possibilities exist. There are also a lot of other venues. Of course, this is a challenge for an entrepreneur, because you have to try and discuss and provide your pitch to many venues, but that's just a pain that you have to take currently that's the system.
Then a little bit what Jari mentioned about the business plan, and many incubators and a lot around Finland, they really work hard that you should have a 100-page business plan. And then Jari's opinion was that it should be a little more light, dynamic, but a bit more comments. How should they prepare their business plan to make it as attractive as possible?
Well, I'm just referring once again to what for instance, Steve Blank was saying while he was visiting Finland. And what he said was that the business plan doesn't actually sustain the first meeting with the customer. That's the fact. And Keith was saying that he hasn't met yet a single company whose business plan hasn't been changing within the first 8 months, for instance. That's the point. You have to be dynamic with your business plan. You have to test it actively all the time. And I think Taneli Tikka was once saying in one interview, I guess it was, he was saying the best way to, for instance, test your idea, your concept in the market is to go and test against the different kind of investors, be it angels or venture capitalists, whatever. But that's the first time, at least, when you are kind of exposing your idea on different kind of criticism, for instance. If you stay long enough in your chambers and develop, even it might be an excellent idea, still, I think we are missing one crucial point, and that's some kind of understanding about whether there's real need for it on the market. I'm starting every time, whether it's my role in Sitra or whether it's my role as a kind of private investor, it needs to be clearly indicated who is the customer. Because there's one thing my longest time boss at Nokia, Anssi Vanjoki, has been pointing out to everyone inside Nokia. I think Inka learned as well while he was with us or with Nokia. And that's the sole purpose of the commercial enterprise is to get and keep customers, period. Everything else follows from there. I had difficulties at the time when he started kind of teaching this phrase to understand what's behind that, but eventually I actually got it. And I think he's right. You have to be all the time clear about who is your customer and how you're going to keep that customer. And then you might have potential for different kind of cash flow.
So business plans, nowadays in the Valley everyone says like garbage in, garbage out. But on the other hand, you need to be able to present. So maybe a good, crisp presentation with some good background slides if you want to sort of do your homework. Other aspect is that you can sort of show evidence that yes, we've now tested this value prop with 10 potential customers. This is the feedback that we got. We, by the way, went to this go-to-market partner and they were quite interested, and this is what the business model could be. In a way, try to elaborate a bit more on the learnings than trying to just polish the picture and tell the good stories. So being very honest is quite important as well. But then once said it, in a way, you need to be able to show some level of understanding how the business scales and how it grows and how you're going to manage it. So it is a fine balance, but nobody wants to read any documents nowadays, that's for sure.
What is very important is that in addition to the plan, you demonstrate your capability to deal with this topic. So you have to demonstrate that you understand this industry, you understand the business technology limitations and possibilities, you understand the competitors, there always are those, and you are frank and open and can create the credibility. And this is very important because double agendas, for instance, if somebody had a thought that maybe I put together another a business plan just for fundraising purposes, and then actually we do something else, that's not going to carry you long. So demonstrate the credibility, openness, transparency, that's very important.
Yeah, there's this topic 3. Well, after the failures, what are the elements that makes you say no? Let's say Inka and you, Tapio, mentioned all the elements, but you get the introduction, you get the pitch, but what is it that makes you say no?
You mean say no to the investment?
Yeah, definitely.
Well, this credibility thing is one quite common that I get the feeling that I didn't hear everything. Then I probably let it go. But I let the other guys comment the other points.
Of course, there's a valuation quite often,
Here we go, valuation.
and which is always on the table when we talking about the investment. So there's a big gap on the valuation idea from the entrepreneur and from the investor. It might end for that, so it don't go even for the meeting stage. But I could also say about this trust that during the process, all the time, the trust between entrepreneur and investor should be kept. So if you say that okay, the turnover is 200,000 and then it's 80,000 after 2 weeks, and that you have one customer in Norway, but actually it was in Oulu. So you lose the trust, then you start to think, okay, what else was not true or a little bit or not told. So it's really important to go one-to-one and really keep the trust.
One thing to add, I'm still kind of emphasizing the importance of the trust, and the team, of course, is crucial part. Because if you can, at the first sight, you can already tell that these guys are missing crucial elements, for instance, from their go-to-market capabilities. Then it doesn't actually add to the trust, and once again, you might lose your 5 or 10 or 15 minutes with the investor. I think you have to be prepared well into that, and when there are questions coming, you should be answering immediately, not thinking about, okay, I have that information somewhere, let me find it somewhere. That's not adding on trust. And I think once again, I'm coming back to this point that if you have in your operational team some kind of gaps in competencies, once again, if you already have some investors, exploit that competence. Bring it forward also to other investors that, yeah, it might be that in our operational team we don't have this competence, but by the way, one of our investors is an angel who is an active owner, and just to protect his own investments, he will do everything to kind of somehow compensate with this gap we have here.
It's a difficult question because typically I guess no decision is made on gut feeling at the end of the day. One aspect is typically market or the competition. You look at the world from the small angle of Finland or Bulgaria or whatever small country we are, and then there is the world. So do we see that there is really an opportunity for the company to grow and not necessarily to become like $300 million company, but to become like dangerous for someone in a way to create concrete value? Then the other no decision is sometimes really the team. If you have a really difficult heart-to-heart discussion that we don't think this model works, we think something else works, if they just, sometimes good teams show you the finger, which is okay, but if they can't sort of have the dialogue, and it's not the easiest dialogue to have because you might have to really educate the angels on your own business and the market. It might be then that you end up talking with the wrong angels if they really don't understand the market. And then the third, what makes us to say no is that the team really doesn't show any progress. So we typically don't say categorically no immediately. We say like, okay, interesting, we would like to hear a little answers to these kind of questions and see how you progress. And then the team keeps coming back. And if nothing has happened sort of concretely to show that this is the way to go forward, it's a good decision to say no at some point of time and not to lose anyone's time. It doesn't, on the other hand, mean that you're not going to get funded. It might be just that angel you're talking with really doesn't get what you're doing or see the kind of a progress they're looking for.
Keith, you see a lot of deal flow. Got something to add?
I think the biggest problem comes again to the team, and many times it's doubts of the many times it's a doubt of the execution power of the team. You might like the plan and you believe the market pain, but you don't believe that these are the right persons to do the business, take the business there. And I think that's the number one there. Usually they find and know that what is the pain in the market, and they know the customer needs there. And maybe secondly, the teams are under resourced. They underestimate how much resources are needed to take the market, and that's not good sign. But if it's the same time here that they know what they are missing and they are ready to hire new people in, they are able, that are willing to develop their board, advisor board, and that helps a lot, of course, to go forward.
I would like to come back what Inka said. It was really important because entrepreneur normally wants that this process is really quick, and investor point of view, it's good to take it a little bit slowly, because then we can see also how you are developing. If you have said that, okay, after 1 month we have this and that, so we can follow. If the process is going, for example, 3 months, then we can follow how the things are going and how are you reaching the targets and milestones. So that's give us, if nothing happens, then comes that what Inka said, that okay, that's really important to keep investor to know what you have done and how you're developing, and okay, we are going and we did it, and next we go there and you went there, so there's a progress.
Okay. Yeah, I guess it's time for our fourth theme, the investment. You've been lucky enough to have the investment made. So what happens after that? It's always the like pitching, getting the investment, but what happens after that? Like, yeah, how to involve the investor? What do you expect? How do you want to get involved?
Okay, if I start, what happens after investment? The working starts. Before that it was, and hard working starts after that. Before that it was only small exercise. Of course I want to be involved in a company like a board member or advisor and help the company to reach the targets, and I think I want to be involved. I'm an active investor.
And I think here it is time to demonstrate this match that I mentioned earlier, that if somebody has, as an angel has said, that he wants to be a passive angel, so let him be the passive. Don't expect him to join the board and do things. But if somebody has specified that he wants to participate, be on the board and do this and that, then let him do it. Demonstrate again the intention, that demonstrate that what we agreed holds. So that's what I find important here. Of course, everybody who has been running a business knows that there are 115,000 million ways how things can go wrong. But in the high level, we come to this kind of basic things anyway.
Yeah, I think what happens after the investment, we have been using some kind of rule of thumb that now I'm talking about Sitra as we, that it's kind of 10 to 20% maximum when we are talking about time before the investment, and the time after investment, it's 80 to 90%. So that's like Ari was saying, that's when the real work starts. And when it comes to angel activity, I personally, like I said, point out, I believe in active ownership. I believe it so much that, for instance, like I said, I don't want to be a passive investor myself. Why? Because I think that I have something to give. But it doesn't mean that I want to get involved somehow into operational management of the company, because that's what these guys are paid for, are supposed to do. So operational management is one thing, the board is another thing, and if the team can somehow exploit my competence, let's do it. But I don't want to start micromanaging, but this is like Ari was already pointing out, once again, the best way to increase trust and credibility of your story is that you are at least keeping the continuous dialogue with investors, giving some kind of hints about where we are going right now. I'm not talking about detailed reports about how the cash flow is generated and so forth, but some kind of ballpark figures, how we are moving towards the aggregate target.
So the work after the investment, what we typically do, we agree some kind of anything from 6 to 18 months project plan together with the team. Our model is to take quite operational roles, even lead the R&D or work on the business development side. But in general, I would say that angels vary a lot, and they typically tend to start helping you when they start feeling that actually your progress in a way helps them to elevate themselves as an angel investors. So we're sort of a tiny persons ourselves as well. So if you're doing well, we're doing well, and we're gonna pitch you. So in that respect, It might be that you expect, for example, your angel investor to open all the doors to potential investors and so forth, and you start to get frustrated that they're not doing that. Well, based on the experience I have, they start to do that when they start feeling that your progress is good enough. So maybe you agree something, on a project level with an angel, and how to engage the people really to work for you. Well, I've used in some companies a mechanism of just allocating shares and maybe having a 2 or 4 years vesting period for those shares, and people in a way concretely work for those shares. So in a way then these advisors and really busy people who put their money and they put their time, and they typically charge like 5,000 or 10,000 per day or whatever from other consultation they do, they actually feel that they're getting something. So there might be ways to build the incentives for this, but in general, after the investment, the work really starts, and it's going to be quite intensive, at least until the sort of a bigger VC round comes.
What if, including Finnvera, well, what happens after the investment?
I think the one crucial area again is the board and the members of the board. And in the shareholder agreement, we require a board seat. And many times the angels in that same round are representing us there, because we are not able to sit ourselves in every portfolio companies. But definitely too long and too many times, 2/3 of the board members are the founders or some other key person from the company. And I think that it doesn't really give you new ideas a lot or develop the company forward to internationalization or growth fast enough if the same people are sitting there. So to create and have a new innovative people in the board is the key issue, and also the advisory board. So that's the development area, what we are looking forward.
Okay. That's about the structure thing. I got a direct question for Keith, as a Finnvera representative. Are you about to make your own private angel investment in the near future? With all those skills, what about? Do you see some potential?
We have some limitations to do this kind of investments.
But you as a person, what would make it for you to invest your personal sweat equity or capital?
When I feel like that, I hear a lot of pitches every year, hundreds, and well, I feel that I love this and I will buy this case. You really feel when you hear that kind of story. But unfortunately, you hear this kind of stories maybe 5 to 7 every year. It's more feeling-based of that.
Okay, good. Ari.
Okay, question was what should happen after investment. So the real clear answer is exit. So we all work together with entrepreneurs to get the value of the company growing and maybe realize it through IPO. Okay, we don't have much IPOs in these areas now, but trade sale to sell the company to the bigger player or some other investor. So of course that's the goal of the whole angel investing. That's the payday, not only to the entrepreneur but to the angel.
Should the entrepreneur have the exit plan already when making the pitch?
At least in the due diligence phase, when we are discussing, there should be candidates presented what might be the path to the exit.
And I think it's very good to have ideas of the exit possibilities already in the very beginning, and also everybody should have the same sort of idea of the kind of exit that we are looking for. It happens quite too often that people just think that, okay, we become rich, yes, we become rich, but nobody has really discussed or thought about it, which level are we going to sell this at the first offer for 1 million, or are we going to wait until Google comes and pays 1 billion, or what?
Yeah, once again, I don't have to say it again, but what Ari was pointing out about this exit, that's something people forget too often. In this kind of market situation as we are right now, for instance, in Finland, i.e. what is the kind of venture capital market overall, how much there are private investors available, it's extremely crucial also at this point of time already say, okay, these are the potential guys who might be interested in buying this venture then afterwards, then you might be one of those few who are right now capable of getting the funding still.
Before the exit, we have definitely think who will be the next round investors. Because usually our limitation, we are going up to 500,000 euros, our first round investment, and the average is something like 250 to 350,000 euros. And then this coming plus takes R&D funds and maybe the young innovative company funding. But we know that this money is only enough for some 12 or 15 months. And we should know already on that point what kind of investors would be interested in investing in this kind of business, this kind of company. And if we don't have a path to the next round, it's not worth of going because it's just a waste of money. But if we see that there's a path for the next round and then maybe the third round, and after that it's time to speak about the exit. Okay, Inka just mentioned one case, this Jokem case, and Jokem was also in our portfolio, and it was only 1.5 years in our portfolio. But that's not the normal way. We still have companies being there 4 or 5 years, so it seems that it takes more, the average like 4 to 6 years before you can do the exit. And now the economic situation is quite bad, and it might take 1 year more. And also the next round financing is quite hard to get. So this kind of things what we are thinking when we are doing even our first round investments there.
Perfect. Well, very interesting. I think it's now time for the very scary part for a Finnish audience, time for public questions. Luckily we have Twitter, so you can tweet Hitachi now. You should tweet FiBAN.org. We got a question here. How do you see geographical boundaries and opportunities overseas? Also, do you use online services like angel.co? Ari?
I'm using AngelList. I'm looking cases from there. I'm also investor in Seed Camp. So I'm looking deal flow around the Europe. I have done one investment to Prague, one to London, and I have invested in Seed Camp in London and also angel fund in Sweden called Spintop. So answer is yes, I'm looking out from Finland too.
I think this needs an applause. Gentlemen, good inspiration. What about Tapio? Getting there?
I think the majority of the angels, at least here in Finland, they look for local investments. Unfortunately, local means typically very local. So if you're in Oulu, you look for companies from Oulu and so on. But perhaps in the future it goes more in the way Jari mentioned. But the reality is that especially if you look for active investment cases, you would like to see the company close. Otherwise, it's much more difficult just in practice to make it work.
Okay, I can continue. If doing this kind of cross-border investment, it's also very good to have some local investor there as a lead investor, maybe who is going to the board or being more active than you if you're sitting 1,000 kilometers away or 2,000 kilometers away. But it's question of syndication.
For me, because of this active emphasis that I have, it's local only, and the only two right now, like I said. But for instance, for these companies, you have to be then global as a company. So anyway, it doesn't mean that you are going to be a local hero in Oulu or in Tampere. It needs to be global reach.
Well, the further you go, the higher are your criteria. So there needs to be a strong local investor, really strong team or something like that. Having said that, we've raised for our own startups like angel money across Finland, across US. So in that respect, it doesn't necessarily always impact, but for us, because we work with the team, I think the farthest place that we've gone by far is a Valley-based company, but it's not easy to work in such a model. So Oulu by far is the farthest that we're currently doing.
So far, yeah. Good. We got a question here.
Hi, my name is Oliver. I'm from Tangarif, and I have a question. I think it's a great opportunity to pick your brains. I think I know the answer, but I want to hear it anyways. I understand, the types of investment. I understand California convertible notes are currently on the rise. what is happening in Finland? Is it equity, convertible notes, Terra Ojanperäs making a lot of noise about share of future revenues, that kind of stuff?
I think it's mostly equity still, but these kind of convertible loans, I think they are coming.
Yeah, it's convertible notes. They have a couple of advantages which make them attractive. First of all, they are easier when at the investment phase because you don't have to do the actual share issue at the time. And on the other hand, you can have flexible criteria for the conversion rate, which sometimes is a good way to get around this validation question, which sometimes is a hard thing to negotiate. But on the other hand, this equity is very, very clear and straightforward way to go. So my recommendation is that always do equity investment if that's feasible.
On a personal level, equity, but we are once again putting Sitra hat on, and we are looking into how we can actually, for instance, syndicate with angels, and in this case we are talking about convertibles. So yeah.
Well, we have one case we've sort of raised close to 1.5 million with convertible notes. It is a sort of a very well-working structure due to the fact that this was a case that it was really, really difficult to get bigger investor involved. Like the biggest investments were like 250K. And the smallest ones were like 5K. So in a way, it gives you a lot of flexibility. The challenge there is that then the investors typically start to ask that, okay, what is the share that I'm going to get if I put like 50K in? And you need to show some level of calculation. What do you think is really the realistic valuation on the A round? Then the Finnish angels in general want to have big stakes in equity. And then the leading VCs and your coach is going to say that it screws your cap table. Well, the reality bites, money is there, you either take it or you don't take it, or then you develop your concept further via bootstrapping or finding a family or someone to support you there. I don't think it's either or, either one can work. But I would say from startup point of view, and having done the fundraising myself, it's less legal hassle to do the convertible note for you as a team. But it's not more work to do the equity-based model if you, in your mindset, in a way say that, okay, we're going to now take 50K, but we're going to take with the same valuation, maybe 200, up to 250 or 300K. In a way, you keep the round open because you're not going to close every investor at the same time.
I think from our annual volume, which is something like 15, 16 million euros, the equity is something 75-80%, and the rest is equity, different kind of convertible loans or notes. But we are quite flexible it's case by case, but we can have a discussion.
Good, we got a second public question.
Yes, I prefer using the microphone over Twitter in this case. My name is Reidar Vasenius. I'm working for Bream, an early stage startup. We are in the business of training people's brains. And I feel very strongly that I'm building something that I want to be working for the rest of my life. At the same time, I'm seriously looking for the opportunity to get an investment. So my question to you is, do you see it as a feasible option, and does it happen that the originator or originators are the ones who are buying back the stock at some later stage? Does that ever happen? Or are there some even a bigger shark taking your piece later on?
Okay, so far it hasn't happened.
Yeah, that's not common, at least not in Nordic markets, but I don't see any reason why it could not happen. Of course, the investor is expecting some return to the investment and sharing the risk. So I think it's at least, my thinking is that it's primarily a financial question.
According to my experience, has not happened with positive cases.
Yeah, and I think if you're really sort of not looking into getting a VC or a similar kind of a development for the company, maybe you go towards like family investors there are a lot of different families who invest also in startups, and they're looking for maybe a bit different investment cycle. But maybe and even angels, it's okay, but to get a VC money, it's going to be tricky if you're not planning to sort of grow the business beyond the scale or something like that.
I forgot to actually comment your question about these new models, because what Tero is talking about, Tero Ojapera and the Vision Plus Fund, it's a new type of instrument. So like you said, not equity, but in this case kind of productions or project funding or rev share model like in the movie business. I think that's a pretty interesting model, and I'm curious to see how it goes.
Good. We got a tweet as well. We're at an awesome event, Slush, and especially Inka, you've been and Ari been judges in the jury. So have you seen something special and that might lead to further discussions later on? What about the feeling for today and yesterday?
Okay, I haven't seen all startups, I only some of them. I think the level has been pretty good here, but of course it's a big mass now. So we need to see the final still, and let's look after that.
Well, total culture change during the past 5 years, I would say, which is fantastic. Really great teams, great ideas, a lot of development, sort of a potential. I would say there's like 3 cases that we want to talk to.
Awesome. Yeah, let's give a big hand for Slush as well. That's a good job you're doing.
Hi, I'm Kirill. I'm with a startup called Group Force. We're based in St. Petersburg, Russia. And hence my question is, would you as Finnish angel investors be willing to invest in a startup which aims to penetrate European markets by incorporating here in Finland? We're on the daily deals market, but we're not...
Can you repeat the question?
We're based in Russia, in St. Petersburg, and we are aiming to go to European markets and by incorporating here in Finland and raise capital here. Would you, as private investors, be willing to invest in a startup like that? We're on the daily deals market, but not directly competing with Groupon.
That's a very good question, and I think it could be also put in a little bit higher level regarding the Russian companies, because I know there are lots of very good and high quality enterprises. But our problem here as private people is the risk associated, because we typically don't have the possibility to study and get really into that level of contact to figure out in reality what is involved in this case, that we quite often just decide to exclude those cases just because of practical reasons. But there is certainly no real reason why we shouldn't do that. And one way of making this happen would be to find a local person who really knows you and could act as your advocate, and who has his own investment also in place to work with you and then kind of bridge this gap that I was mentioning.
I think that's what is the reality today, exactly like Tapio was saying. But why I think events like this are so valuable and how this development has been going in the right direction is that because this is such a novel thing for Finnish investors that guys like yourself are coming here. We don't know yet enough. But the fact is that more we are getting this going forward, I think more the knowledge increases. And if we get the syndication partners also from the local guys, I think that's just the right way to go forward. So I believe that this event might be in the future one of the key events in the whole world to get this done. And I think if we can somehow gather people from all the Baltic regions, Russia, and so forth, even from Nordic countries, I know that it's tough to compete against, for instance, Sweden, but the fact is that this is going exactly in the right direction. I think we learn to do that more and more and better.
If you have a registered company here in Finland, OY, so you can then apply funding, for example, R&D funding from Tekes, and we can also do the investment to the company if we otherwise like the company. So in that wise, we don't have a limitation of it. But it must be registered in Finland. But the ownership doesn't matter.
Yeah, so I was just coming to this point. I think one thing which we're a bit neglecting in the discussion is that very typically Finnish angels count that there will be Tekes financing involved. So in a way, you're not just investing like 250K, there will be additional 250K coming from Tekes, so it's 500,000. And maybe if we get a little more private funding, maybe Vera will join at some point of time. So suddenly you start piling up the governmental sort of instruments. And critical in your structure is to have the OI, as Keith said here in Finland, but also a clear statement that your IP is managed from Finland. So as long as you do it in that respect, it's going to work fine. And then, of course, the question is like, which part of the key team is here? Which part is in Russia? How are the sort of funds being managed and so forth? But at the end of the day, it's not going to be a huge issue. But as Jari said, I think we still need some structures for that. Finnish investors aren't really that familiar in investing with Russian teams yet.
Yeah, I think I don't see much problems on that. So if you have a company in Finland, you apply investors. I don't see any big problem on that.
Perfect. Yeah, quick comment. FiBAN just started cooperation with St. Petersburg Business Angel Network, so maybe we get that bridge somehow as well. But that's all about this. This was an excellent talk. Quickly about FiBAN. Just if you're as an entrepreneur interested in getting involved with these guys, there's fiban.org, so you can submit your case. We'll do everything we can just to put it further on. And Ari, I guess you have the final words.
Okay, I had the same words that please put your company into the fiban.org, and also if you want to be a angel network member in Finnvera, you should approach Finnvera, or in a FiBAN you should approach FiBAN and apply the membership of the angel network. So all your entrepreneurs, your potential angels, when you grow your business and you make an exit, then you might get the serial entrepreneurs or angel investors. So I think after 20 years, maybe we all belong to the angel network.
You just made a pitch to the audience. Thanks, everybody. Thank you.